Hey guys, Sports Loss from BK Forex. Welcome to our Forex daily technicals for 8/30/13. Why 98.50 is key for dollar yen. As always, trading Forex with margin carries a high level risk may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading margin and seek advice from an independent financial advisor. Well, we had a definitely strong pro-dollar day today, primarily based, I think, on the idea, of course, that maybe the whole Syria military venture may not go off as everybody thinks it will, compounded also by pretty decent U.S. data, good jobless claims, and very, very strong revision in the GDP numbers. GDP is, of course, very backward-looking, but the fact that we had some power momentum in Q2 GDP suggests that the economy is not doing nearly as bad as everybody thinks. That pulled euro dollar yen all the way to 98.50, but did not close it. And this is a critical thing here because the pair has failed at 98.50 several times here. Here was the spike beforehand. And at this point, that becomes really now the operative level for it to conquer, because if you can just sort of cross 50, hold, then remount and mount the 99 level, it would really put it into a much more constructive place, because as you can see here, we already have higher lows, and now we'll break up to higher highs over here, at least on a very near-term basis, and put us now into a whole new level playing field, into the 99-100 level playing field, and just a complete change of dynamic as dollar yen begins to really percolate up. This, of course, is going to signal yes on a taper, 3% on the bonds, all those things that would correlate very well with a higher dollar yen trade. So for now, the jury remains open, and with these levels really need to be broken to the upside in order for us to have confirmation. But certainly the path least resistance looks to be to the upside for right now. Dollar looks to be pretty strong. And conversely, we talked about yesterday how euro had to hold or fold at 33, and today it folded. It folded big time. 33 got broken. 32.50 got broken. We're now sort of trading, what, 34, 33, 32, 34, 35. Really pretty much in front of this 32 level, which was support before. We bounced off of it yesterday, or sort of New York session today, and it definitely looks like we want to test it over here. So if we test the 32s and that starts to break, that really opens up a much deeper dollar rally, all the way into the 31s, possibly even all the way down to 30.50, 30.100, a complete unwind as the bid comes back to the dollar, the yield comes back to the dollar, the growth premium comes back to the dollar. All those things that looked so hopeless and bleak just 2 or 3 days ago suddenly look much better for the dollar. Welcome to the world of currencies, where reality changes on a dime, and right now it seems to be changing towards the dollar as we speak. Cable kind of had an inside day, had a very, very quiet day today. The actually story in cable for the next couple of days is really going to be non-currency related. It's the Vodafone takeover, excuse me, not the Vodafone takeover, but the Vodafone sale of Verizon, which could be very, very pound bullish. For now, though, we pretty much traded the inside day here. We have to see if we can take out 55.50 to the upside. It really puts us back on track. But as you can see, cable has just been actually printing about 7 or 8 days of negative candles. So it's not like it's uber bullish in this structure. And of course, with dollar being stronger, the pull could be to the downside. The key thing here, though, is that we had a big bounce off the 54.20. If that gets given in tomorrow's trade, that would be much more negative, because that would suggest that this whole 54 line could be very vulnerable to an assault as the day progresses. And of course, hobbling along in last place, as it has been all week long, is Aussie, which seems to be finding a modicum of support here at 89, but really not very much support at all. 88.50 is the key support here. Of course, Aussie still looks very distributive. The key thing here is the break of the 88.50. If this gets broken on a major dollar rally move, that really opens up the possibility of a run all the way out to 85. So that's an interesting thing to watch. Those are yearly lows here and multi-year sort of support levels, and those things get broken, that really puts a much more negative spin on Aussie than even the worst of the bears have seen. Anyways, that's how the final day of the week shapes up. Wishing you guys the best of luck, the best of trading. Sports Lossberg for BK Forex, over and out.